Lots of action in teen retail right now. There were an upgrade on American Eagle. We get earnings from Urban Outfitters after the bell today. So what's the outlook for this key sector of retail, teen retail, and how do you make money in this space? Joining us with their thoughts, Kimberly Greenberger is managing director at Morgan Stanley, and CNBC contributor Stacey Widlitz is also with us. And I should point out, neither of you is a big fan of teen retail right now. Stacey, why is that?
Well, it's a tough space. First of all, you look at last year, and certainly retailers dealt with these really high cotton prices. So gross margins were down from 500 to 1,000 basis points. So you have to look at the story next year. Fine, we're facing these easy comparisons with cotton as the price comes down. But the environment is just incredibly promotional, and that's something that may not go away.
Prices and costs are up, and so is competition. But Kimberly, if you had to pick one teen retailer right now, who it would be?
Well, I would say we're getting incrementally more constructive on American Eagle Outfitters. We did upgrade the stock in early December from underweight to equal weight. We share Stacey's concerns about the very intensely competitive pricing dynamic in the mall right now among these teen retailers. And so it's just tough to make a lot of money for any of them at the current moment. I would point out, however, that American Eagle has a new CEO. We were very encouraged last week to hear his views on controlling inventory far more going forward than the company has in the past, and also returning the organization to a focus on returns on invested capital, both of which we think are very positive for shareholders.
All right, so that's your favorite. Stacey, we hear from Urban Outfitters after the bell today with their earnings. What are your expectations there?
Well, no huge surprises ahead. They've told us that their same-store sales are up about 2%. And we know, like the other retailers out there, they've tried to clear that extra inventory and at a cost. So gross margins may be down close to 1,000 basis points, similar to Aeropostale. So I don't think any huge surprises, but certainly the weather has been a great factor helping most of the retailers. We heard February same-store sales. So we expect to hear positive comments about the start to spring.
Yes, the weather. Finally, Kimberly, you feel JCPenney and the revamping they're undergoing right now is actually helping some of their competitors in the teen retail space. How?
Absolutely. JCPenney is undergoing a very big transition in terms of pricing and vendor composition. My partner here at Morgan Stanley, Michelle Clark, published a very in-depth analysis on this note last week, and we looked at together the overlap in geography and income demographic between JCPenney and some of the other retailers out there. Particularly Old Navy looks like it could pick up a little bit of share, Gap Division as well, but also Aeropostale. So at the lower end of pricing in terms of the teen space, you could certainly see a little share gain there.
All right. Ladies, Kimberly, Stacey, good to see you both. Thank you for your thoughts today.
Thank you. You too.